All right, it's Michael Robbins, May 16th, 2020. We're in the midst of the coronavirus pandemic, trying to see what the markets are trying to make of this and what the headlines are saying, because 2 years from now it should be very clear on why the markets went up or why they went down from here, but you can't see the forest through the trees. So we're going to have a look at a few of the headlines out here. This one, assessing the market, was really quite interesting. What it's basically acknowledging is that you've got people on both sides. You got people saying, everyone's bearish, fear is peaking, this is the time to buy, and you've got a bunch of others who are saying everyone is too bullish. Both are equally unreliable at the moment. I think this captures it pretty well. It's neither bullish nor bearish, but rather befuddled. And if we come down here, we can see here's a 200-day moving average. Market keeps bumping up against it, and some are using that as a reason to state that that's why this is not we're not really in a V-shaped recovery. We hear the V-shaped recovery and U-shaped recovery. Mixed picture when it comes to professionals, right? Even the technical analysts. So,
we haven't started formal negotiations.
oh, this is interesting. The put to call ratio.
Kevin Hassett and I have been meeting.
So, yeah, they obviously during this crash, a lot more relative interest in the puts, but that has come down. Yeah, interesting. It looks like that put to call ratio now is pretty much what it's usually running. So not a great deal of sentiment indications there. Having a look over at Barron's, not too much in terms of market predictions or kind of broad assertion. We get some minor bearish indications here. Not so much about market predictions. We come over here to Fox Business. The GDP could sink over 40%. Now, whether that's a short term or long term is, yet to be determined, and whether the market is adequately factoring that in is to be determined. But hindsight is 2020, and I think that when we look back at this in a couple years, it'll all seem a bit more clear. So, over at Seeking Alpha, this was kind of an interesting thing. You don't want the market, you want the market to go down, and essentially what it's saying is that if the market goes higher, it becomes less reasonable, and therefore, increases the fundamental disconnect between the earnings. So, a rather interesting piece here. But in a moment, I'm going to come over to another one on Seeking Alpha that really points to those fundamentals. One of those, maybe it was the CNBC one, was looking at the 1 year forward earnings estimates. But the market isn't limited to a 1 year forecast. So
we're not going to jump in.
So obviously a bearish sentiment there.
Okay,
so hard to justify, but the message of the market is clear, higher. So while this is a bullish sentiment, here's what I find the most interesting. They start looking at 2-year projections for some of the major companies out there, and historically what that has been running
for
on.
investors, for workers, for risk takers, for
So,
entrepreneurship. That is the American way to
oh,
do this.
no,
Thank you very
this is
much,
not the
Larry
right
Kudlow.
chart.
Great to have you with us
All right,
again. We
where are
love
we
that
here?
talk of a blowout 2021,
Yeah, this is
and
it.
I can't think
This
of
is the
anybody
beauty.
who's not in favor of that. Anyway,
As
Larry,
tech stocks
thank you, sir.
near a
Great.
breaking
Appreciate
point,
the
so do the
advice, Stu.
markets. All
Appreciate it
right.
very much.
Thank
So,
you very much.
um, so there was this new GDP projection that was lower. I'm not sure when that projection came out and how much the market may have baked into it. But here we go. So here's Microsoft's stock price relative to its earnings per share estimates for the next 2 fiscal years, right? And so you can see here that up at 26, over the past few years, it's never been at this level. So this would definitely suggest, that that stock is overvalued. Um, the Apple is also kind of dangerously close to this rather high. Uh, Essentially it's like a forward PE, the price of the company relative to its annual earnings or projected earnings. Um, Amazon is not as bad though. Now, granted, this is revenue. It's not earnings, but you get the same kind of idea, and that is that Amazon was running even higher, kind of late 2018, as a multiple to its 2-year projected revenue. And then if we come down at Facebook, Facebook does not seem overvalued. It was peaking right back here, and yet now it's kind of running around its average. So these are some of the pieces of information that the market is absorbing and trying to figure out what to do with. As we can see, there is bullish and bearish sentiment, and I look forward to reviewing this in a couple years and seeing what we can learn for next time. Stay safe.